Hello, it's Rhonda Thomas, and we're just about to do the last three exercises in managerial accounting, Cengage managerial accounting coursework. Okay, I'm going to share my screen. I'll try to be as brief as I know how to be. So we have these last three problems, 6, 7, 8. Okay, and 6 is a joint cost. Okay, a joint cost allocation using the net realizable value method. Net realizable value method. So this can get a little tedious, and I've done this two ways. I've done this across this table to get these answers, and then I've also did each product by itself with some information on the side, like how that got calculated and so forth. So let's just read through it. Okay, they have three products: wood chips, wood pulp, and mulch. These products are produced through harvesting trees and sending the logs through a wood chipper machine. One batch of logs produces 20,400 cubic yards of wood chips. So I've got the cubic yards listed, 10,400 cubic yards of mulch. So I jump down here to mulch, and then it's wood pulp. Wood pulp is 9,200 cubic yards. The joint production process costs $34,000 a batch, or $34,000 per batch. Okay, so there's 40,000 cubic yards per batch. Okay, and then I also have those costs over here too, just because I had it in different places. Okay, so it doesn't matter which way you want to do this, but if you want to see the math for each of these items, you can see it here a little better. So the joint production process costs a total of $34,000. After the split off point, wood chips are immediately sold for $25 a cubic yard. So those wood chips do not get processed any further than the split off point. Okay, so the split off point is $25 per cubic yard, while wood, pulp, and mulch are processed further. Now, to find the market value of the wood pulp and mulch at the split off point is estimated to be $22 and $25. So there's where I got those amounts, $22 and $25,000. And then you get a market value at split. So you take the number of batches times the cost per batch, and you get these numbers here, market value at split. Now we want to compare this. We're going to compare this to processing these two further. So the market sales price, I like to put that in there, sales price per cubic yard. So this one is sold at split off. So there is no processing it further. Okay, so processing something further is going to take more cost, but you can probably sell it for a higher sales price because, yeah. Okay, so when it comes to the wood pulp, if it processes further, the additional production process of the wood pulp costs $5, after which it is sold for $30. Okay, so here's the market per cubic yard, and then 30 minus 5, and I needed to put another part of this in here. I needed to put net realizable value per batch. no, per yard, sorry, per cubic yard. That can help. Okay, that can help. So we don't have that at all here. Okay, we just don't have it because they sell it at the split off point. So it's just okay. So the net realizable value per cubic yard is the market sales price minus the cost, the extra cost that is, and they didn't do that. So that's why that one is still 25. However, if you take 30 minus 5, you get 25. And then if you take 27 minus 4, you get 23. Okay, so this is the net realizable value per cubic yard. Then we take, okay, so then we need the total realizable value in dollars. So once again, that 510 is the same at the market value as it is net realizable value because it sold at split off. Okay, and I said that quite a bit down here, not processed further. Same as total market value because product is sold at split off point. Okay, and then you pick which one is the bigger of the two, the greater of market value or net realizable value. Well, there was no difference. Here it was 230 versus 202 400. So it's the net realizable value. And then here it's the market value that's bigger than the net realizable value. So you put all those in and you add it up and it adds up to $1 million. Okay, it adds up to $1 million. What we want to know, because this is the column that we then do our percentages on. Okay, percentages. So a percentage is taking the amount for the wood chips and divide by the total value. Okay, total value, and that is 51%, and 51% times the 34,000 is 17,340. So put your 34,000 down here or whatever your problem is telling you. And I got 17,340 for my wood chips. Then when it comes to percentage for the wood pulp, you take the 230 that we said was more and divide it by 1 million, and you get 23%, and you get 7820. Okay, and then finally, all of these have to add up to 100%. And it does. And so does this. These three need to add up to the total of the joint cost process, okay? Because all of these products share this 34,000, okay? And once again, we want to figure out how much goes to wood chips, how much goes to pulp, how much goes to mulch, all right? You can look at it this way too. I did this vertically. There's the cubic yards, market value per cubic yard, total market value at split off cost. I call that total market value. Market sales price per cubic processed feet, less additional process further cost per yard. We didn't have that. So once again, this product was sold at split off point. It was not processed further. So, yep, that's how we got a lot of the joint cost allocation. Okay, so now we do this one, 9,200 at a process further cost of $22. We take those. So we take 9,200 yards times 22, right? That particular one can sell for 30 if processed further, but you have to subtract the $5 additional processing fee. So its net realizable value is more than its market value. The total net realizable value is 25 times 9,200. Okay, this one is greater. And then when you add up, you say, where are you getting your 23,000? When you take 230,000 divided by 1,000,000, you're going to get 23%. Okay. So, yep, you've got to divide all of these numbers up here by 1,000,000 to get these numbers. Okay. So that's what's happening separately. There's the amount, 23,000 times 23% times 34,000 gives you $7,820. And then this mulch we processed further. Cubic yards is 10,400. 25 is the amount of the market value per cubic yard. Yeah, 25, there it is, 25 per cubic yard. Sometimes it's hard to chase all this stuff down and put it down in a form that you can make sense of. This took me a little bit, but I'm glad I did it because it really helped me. So anyway, the total net realizable value is $23 times 10,400. And which one's bigger? The bigger one is the total market value at split off. Okay, so then when you add total market value at split off plus net realizable value at processed further plus your market value at split off for these three items add up to the $1 million. And that's where the 26% comes in. 26% of 34,000. So there you have it. Okay. All right, moving on. Number 7, we're going back to support department cost allocation. So we have 2 departments, a printing and a framing, and then support departments of janitorial and cafeteria. Put the costs in, and the costs are down here, not up here. So I put mine at the top. And so all the costs that we have to figure out where else it's going to go is 73,800. Okay, so the first department we're going to allocate is janitorial, and they use the square footage, square feet, janitorial cost driver, percentage of square feet is your janitorial percentage. Okay, so once we know the square footage, so square footage for printing is $4,230, 4,770. These are not dollars, these are square feet. There is the total square feet. When you divide the square feet of printing by the 9,000 in total, you get 47%. Okay, the opposite of that is 53%. So when you take 4,770 square feet divided by the total, you get 53%. Together, those add up to 100. Okay, and then they're going to take, so here's the amount to be allocated, right? The amount to be allocated is $5,200. And by the way, because it says there are no large differences of costs, we might as well just use the easiest one. And this is the easiest one. It's the direct method. Okay, the direct method. So we're going to directly allocate $5,200 to printing and framing. So there's nothing left in that department. Okay. And then we're going to allocate security based on the square footage. No, based on asset value. So the asset value for printing is $12,390 and framing is $8,610. And when we take the percentages of those, we've got 59% and 41%. And when you take 59% of this cafeteria amount, okay, now this is by itself. We did this directly and then directly. This wasn't sequence. If this was sequence, this one would be allocated to all three of these. And then whatever's sitting here would go to the rest of the other two. All right. So long story short, what do we want? We want $2,444 being allocated of the janitorial department to printing. And then framing gets $2,756. And if you add those two together, it has to come to the amount we just allocated. Yep, 5,200. Okay, it's a good check your work spot. The next one is $3,894, and that's allocating the security cost driver. The security costs are $5,200. So if you take 59%, okay. Okay, yeah, this is the cafeteria. Oh, nope. This is the security. Sorry about that. Let me put that in. Security. Just a minute. Let me go back. I must have not changed it from the last time. Okay, so it's janitorial and security. And security, security does their cost driving by the total asset value of what they're guarding, right? So it looks like printing has more higher assets than framing. Together, it adds up to $21,000. And when we take a percentage of this 12,390 divided by 21, you get 59% and 41%. And then we're going to use these percentages times this amount of 6,000, right? 6,600. So 6,600, 59.0% is 3,894, and 41% of the 6,600 is 2,706. Notice it adds up to 6,600. So that works out good. So 3894, 2706. Okay, and it said identify the department that gets higher costs due to square feet. So here is square feet, and it looks like framing does. Okay, and then who gets the higher cost based on asset value? So asset value had more in printing. Okay, more in production. So that's the printing. Yeah, that's the printing department here. We've got printing and framing, and there's the one with the most assets. All right, here comes the last one. All right, we're going to do a little more joint cost allocation. Okay, this one's a little different. We're making lotion, hand, body, and foot. So we're going to use the market value at split off method. So hand lotion, body lotion, foot lotion. Here's how many bottles. Oh, by the way, the first thing I noted was total joint cost per batch, not a total amount, but per batch. So keep that in mind when we go through this. There's hand, body, and foot. Bottles per batch, 80, 40, 25, 125. Now, don't think that this is batches. This is how many bottles are per batch, okay, per batch. So the market value, it says that the hand lotion is immediately sold at the split off point for $2.50. So I put $250 there. So the body lotion and the foot lotion process further with a cost of here, and it's down here. This is it's an assumption of how much they could sell it for, $3 and $3.20. So I put $3 and $3.20 there. And then we do 80 times 250, 40 times $3, and 25 times 320. Those are the dollars amounts, and there it is, it adds up. Okay, it adds up. Now what we want is to take the total value at split off divided by the total, and that is 50%. 120 divided by 400 is 30%, and 80% is $80 divided by your 400. Okay, that is how I'm getting these allocations that must add up to 100. So there we are, 50, 30, 20. The joint costs, we don't have them in total. We have it by the batch. Okay, so it's the same joint costs of 250. And now we want to do this. So we're going to take, okay, so let me see here. There's the joint costs. Okay, so then we take 50% of 250. So 125 gets allocated to hand lotion. 75 gets allocated to body lotion, and $50 gets allocated to foot lotion. So it might seem a little wonky, but there's how it adds up. So the body lotion, right, that we are total market value at split off. Okay, so we're selling the body lotion. Okay, the body lotion is okay, the market, the total market value at split off. Here is, so here in between the market value per bottle at split off is $2.50. They're $3 here, and the body lotion should be yes, and the foot lotion should be no. Based on the information provided in your answer to part 1, which should Lovely Lotion continue processing body and foot lotion after the split off point? Okay, so here's that split off point. And body lotion, we say yes. And foot lotion, we say no. Okay, because it's such a low percent of total market value at split off. This is getting lower and lower. So let's look at it another way. Okay, let's look at it another way. So this time we're going to use, so one was the market value at split off. Now we're going to use the net realizable value at split off. And if you look here, I've already done it, but it's the same 250 that gets allocated. All right, so this number goes to, that goes to the hand lotion. The body lotion is 75 and 50. Okay, so so this is what we just did. Now we're going to make it a little bit more information. So it's the same column as this one here, same here, and then we get into a market price per bottle. Okay, market price per bottle. The hand lotion sells at the $2.50 each, and there is no added extra cost. $2.50 to $2.50. All All right, so let's go ahead and put the rest of this in, and then okay, then we have the total market value at split off. That's the 40 times the $3. And then the market value of the 25 foot lotions, 25 times 80 is, I'm sorry, 25 times 320 is $80 for a total of 400. Then the price per bottle, 250, 775, and 400. There's no additional cost because hand lotion is sold at split off. So there really is no comparison to it. So what we have here is 250 a bottle. It stays that way. And that's the net realizable value, which is the 200 times 250. So here's what we're doing. I'm sorry, 80 times 250. There we have it. Okay, then we pick between the greater of this one and this one. Well, there is no difference. Okay, there is no difference for that problem. But the next one we could, that has the 40 bottles per batch, and this is how much it would sell off. Okay, then the market price, they said it would be $5.75 with about 25 in additional cost. So that brings it down to a net realizable value of $5.50 a bottle. And we take that times 40 and we get a net realizable value of 200. Okay. And then we take, we almost forget we're doing math here. Then we take 25 times the 25 times the, where am I at here? Okay, that's the net realizable value of, so this is hand lotion, not wood pulp, it should be body lotion, sorry about that, and foot lotion. So we're basically trying to make a decision as to whether continuing the foot lotion, continuing the body lotion, which one makes most sense. Okay, so once again, here we are with the net realizable value of each bottle. Here's the market price of each bottle, 4 and 315 and 525 and 550 and 250 and 250. Okay, there's no additional cost because there is no net realizable value because we sell it at the point that we split it. 25-cent additional cost is going to go in. So then this is the market price minus the added cost per bottle. Okay, so that's why you're getting that. Okay, the total net realizable value, okay, when you do the math, total net realizable value is the 250 per bottle. Okay, and then we take 250 times 80 and we get whichever is greater, right? Whichever is greater, 200 or the net realizable value, they're the same. Okay, they're the same. So it turns out that when you take 200 divided by 500, you get 40%. 220 divided by 500 is 44%, and 80 divided by 500 is 16%. So we're moving over. Okay, so there's the net realizable amount per bottle. There it is, 250. There's the total net realizable value. There it is. And then there's the greater. Okay, and then we use this column to do the proportion, right? So once again, 40% is 200 divided by 500. There's where you're getting the 40%. the joint costs are per batch, not per bottle, not in total. So now we want 40% times 250 is allocating $100 to the hand lotion. 44% of 250 allocates $110 to the body lotion, and then the foot lotion gets $40 allocated because it's down to 16%. Okay, hopefully this helps. I didn't do the flesh out like I did up here with these. I think when you get going with it, you can start making sense. But if you were looking at these two methods, notice we still allocate the same amount in total, right? We allocate $250 per batch. Okay, allocate $250 per batch. But in this treatment, 100 of it goes to hand lotion, 110 goes to body lotion, and $40 goes to foot lotion. And that is enough, I think. All right. So, yikes. You can really get, the devil is in the details. There is no doubt. Okay. So I am going to close up here and say goodbye for now and stop sharing and get this out there for you to use. We'll see you on the next video.